What is up, everybody? Logan here coming at you guys again with another video, and I really appreciate all the support as always. And I think the last video on the scalping series that we did about 2 weeks ago is at 7,000 views, which is really awesome. So I appreciate that big time as well. If you guys have yet to leave a like or a comment or subscribe, I'd appreciate if you did that now. But today we're going to talk about more scalping ideas. So I'm up about $93,000 P&L year to date. I think when I filmed the last video, we were up like 54,000. So in the last 2 weeks, I've scalped another 40-ish thousand. But I only did one trade on Memorial Day week, and then I lost on that one. So for me, it's like I had a losing week. There you go. I think we lost like 400 or 500 bucks or something like that. But so this is still, it's 3 weeks of time have passed, but I've only been, really trading this port for like 2.5 of those weeks. We'll go over some price levels I was looking at for today's trades. We'll go over a handful of ideas that I want to break down as far as what I look for and why this week was a perfect week to trade. Especially, if you're on the bullish side, which we're in a bull market and we held support quite a bit. So hopefully you were throughout this week. We'll break down a little bit more of the entries ideas. We'll look at my charts tab, looking at the S&P, of course, go over multiple time frames. We can even zoom in here and you guys can see we're a little bit extended, right? As far as like my mean reversion charts that I use for a lot of this. You guys can see, like I said, the overall P&L year to date's down here. Right now I'm rocking 142 in collateral, and these are the positions. And then I also have some unallocated swings I've put on as well that I just added today. So one thing I'm also going to do, I have posted some of these scalps in Amplified Investing. You guys can find the link down in the description to that. And I'll end up posting these. I post some of the levels that I talk about throughout the day when I get those fills as well. But today we did a quick one of the early day scalps we did with the portfolio, and then I'm going to start incorporating a handful more of them. So if you guys want to sign up, the link is below to do that. If you use code AMP, right? Just AMP, code AMP, you'll get 10% off your first month. And then I'm also running a 6-month deal as well. Feel free to reach out in the Discord if you do join that way and want to come scalp with us a little bit, because the 0DTs are going to make the return. I've had a lot of good success scalping these last couple weeks, and I'm excited to share some of these trades with you guys. All right, so we're going to talk about some ideas and where a lot of these trades came from, and kind of my ideas, because I have about 3 main rules when it comes to shaping a trade, when I'm going to enter one, when I'm going to decide to take a trade off, why I like the position I like. But this week was actually a really perfect week. So if we go to the charts tab, we could use the 15-day 10-minute. We ran all the way from the bottom end all the way to the top end. So I'm looking for some call credit spreads going into next week as far as adding some new positions, just because of how extended we are to the upside on this playing field, where we usually just revert back into the mean here. So I'm going to bring you guys over to the 90-day 1-hour chart. I've talked about it multiple times. This is my absolute favorite chart that there is. For me overall, if we take one of these trades that I did today, so I did end up removing this 5390, 5400 earlier for a little bit of profit. I think it was 900 bucks. You can kind of see the difference here. But for example, if we take the 5320, 5310s, we could just move these to a group real quick for the video. So we'll just call this, today's big scalp. So that one yielded us today a little bit more because I rolled some of these than the 6580 here, but this was one of my favorite setups that there was. And we'll talk about this a little bit, but today I was looking at the S&P and the ES levels. So if we go to ES, a couple weeks ago, we popped up to 5343, 5360 even, and then we had a really decent pull down, right? About 200 points. So right after that started to happen, we were flagging right here. We had this little bullish flag. If I zoom in a little bit to show you guys, it kind of stretches it out even more, but we set a low, we broke back through to the mean, came all the way back to support again and created this flag shape where even though the market is continuously getting exhausted at the mean, we continue to make higher lows, right? And that's a very bullish thing for the market. It would be bad if we rolled back over, maybe tested the lows and fell through it. Overall, we're still in a bull market, which is really beneficial to anybody on the green side. And that's my first note that I have here. When you're scalping and you're looking for these breakout plays, which is what we've had this week, you really want to be careful and know what market you're in. We're in a bull market. We've been in a bull trend for a while now. I don't really see this stopping anytime soon, but also I don't try to predict the future as far as what we're going to be doing in 6 months. I like to take things day by day. So we are squeezing quite a bit here. And, the last time we've squeezed, we had this big push right here on this candle when we moved about 80 points. So I could expect to see a pretty decent move at some point next week as the hourly squeezes generally cause a little bit of movement in the markets, 30, 40, 50 points, which if you're on the wrong side can hurt pretty bad. So for me, I'm always paying attention to that because you want to identify which side you should be on for most of your trades. I've probably done 4 call credit spreads in the last 3 weeks, and the rest of my trades have all been PCSs. 2 of them are today. 2 of the call credit spreads were today. One I was in for 5 minutes, and then probably 5 to 10 minutes, and then this one I still have on. I plan on letting this one go to expiration. So we have the bull market or bear market. Number 2, we're going to have the trade the near expiry options. So by trading the 0DTs, and why I like the 0DTs so much is because you get rapid time decay and volatility decay. So as the day goes on, unless the market's absolutely free falling and volatility is rising, those contracts due to time, because they expire by 4 p.m. today on the S&P, on your SPX plays, it's going to give you those significant price movements, like it says here, which can be really beneficial for scalp trading. And I know for me, it's like my favorite way to do it because you also, not only do you get time on your side and you have the volatility decay if you're on the put credit side. So, the market could chop all day and you'll make money from it chopping. But more importantly, when the move does go in your direction and you're in the put credit side, generally the volatility falls. So you're also going to see those contracts burn off volatility as well. So, and the expected move might go from, if we flip over to the trade tab here, I have ES pulled up, flip to SPX. So you might see this, like this morning, this expected move is 34. Now it's down to 15 for the rest of the day. So you're also getting that volatility decay, which is a very important piece of trading, right? And I always try to pay as much attention to that when I'm putting these scalps on, trying to find my way in and out of these positions. I just find that to be like as beneficial as it gets as far as where am I putting my strikes, and then how can I benefit off a 5 point move away from me? Can I get into something for $1.50 and close it for $1.20 and then say, hey, I had 20 contracts and that scalp took 5 minutes, just ideas, right? These are some ideas that I want to show you guys that I use throughout the day because I really like scalping this market. We've talked about this before. My goal is kind of $100,000 through 4 weeks. And that's something that my goal, if or like a monthly basis, because that would be really worth my time to continue and deal with the stress. And, it's definitely a stressful thing when you're scalping because you want the market to go in your favor. Sometimes it will, sometimes it won't. So you really have to be, really level-headed when you're making your decisions. So if we pull this back up too, down to number 3, I really want you guys to mark your ES or SPX levels. Overnight ones are very important if you're scalping 0DT options. I track the ES. I also track the S&P. My levels for today, and we'll chat about this. We'll go to the flexible grid because I absolutely love this chart. And we'll go into one of my bread and butter day trading charts. So we were squeezing a bunch back here. Basically all day Thursday, we did zero price movement, which led me to assume we were going to have a big move this morning. Well, here's the big move, right? Because a squeeze generally dictates a move. We squeezed on Wednesday, and then look what happened. The market shot up all morning, and then into Thursday we chopped. So I put on a lot of positions that morning when I saw the squeeze was firing positive. We are above all the moving averages. And if we come back here and I draw a line, and this is going to be the best line, here we go. We'll draw this little red line, and then we'll also draw this little flag shape right here. So technical analysis also isn't perfect, but I know for me, when I see these higher lows, we're coming back to the same trend line, and we've been testing that over and over and over. We're in a bull market. Generally price goes up, and we had a squeeze building. So for me, I'm really trying to identify, okay, is this the time to get bullish? And I sold a lot of put credit spreads on Wednesday, had a lot of things bounce back in our favor, and then I didn't start shorting the market until we get up to these ranges that we're currently in. But I'm also very cautious about being on the CCS side because we're in a bull market. So, 80% of your trade should be a bullish trade. So those are some of my ideas that I really like and I'm always find myself thinking about. So let's zoom in and I'll really get into the bread and butter. And I talked about this in the last one. So here's a great example. We're going to get really in depth here. So on the 10-day, 30-minute chart, we came back here. 53.80 was one of my levels. So I had 53.80 written down, 53.75, because this is right above that range where shorts came in. And support and resistance, those are zones. So if you were to draw this as a zone, which I had this one written down, you could add the drawing, grab your oval tool, and just say, hey, this is resistance. So anytime price enters this zone, I'm grabbing a CCS. So I grabbed a call credit spread today, that one that I pulled up for you guys to take a look at. When we were coming back into this resistance zone, this candle wicked it down about 10 points. And then I closed out of the trade, 5-minute trade. And I still have some CCSs on that I plan to let expire today in about 2 hours when the market closes, which right now are 40 points out of the money. So unless we rally 40 points in the next 2 hours, which is totally possible, I would just say it's less likely here. So we see this move down, right through this candle. This was off of the unemployment data that came out this morning. We had a 34-point expected move, and I'm pretty sure this move from yesterday's close, placed this all the way down to about 53.30 because we closed at 53.60 on the ES. It was 62-ish, right around there. So I'm paying attention to the ES. I had that level, and then of course my supports are 53.40, which is 39.40. So as you guys can see here, if I right click on this, this is my 195-day moving average. This is my exponential one, and then I have my 390, which is the green one. So I like to use these and I trust these as my support, and I always like to be on the side of the trade that the price is relative to these guys. So if the price is above it, I'm selling put credit spreads, right? And that's why all my spreads are spreads for all the way down here, that are put credit spreads that have, ridden out this ride today and have done well. And then I, at the moment, have call credit spreads that would need ES to break above 5,400 for those to get tested even. So much resistance up here. I'd be shocked to see that happen today. And those expired today too. So seeing this candle break all the way down to the lower end of the expected move, right? If it was 35 at close, you take the next day and you can range anywhere from 35 to the upside, 35 to the bottom side. So when I see that come down to support, I started opening these trades. And these are the ones that I've highlighted here. This morning I grabbed them. You guys can see here trade price, it was 433 and then 273. And now the mark's down to about 10 cents. There's $300 left to collect. And then I rolled a couple of them into Monday. I had 50 initially. Now you guys might be asking, Logan, why don't you just buy a 0 DTE call or put? I do occasionally. I usually only do 5 contracts and I spend around $1,000 per contract. I like the at the money ones if I'm going to do that. We could even go right now. I guess this is kind of a bad example because it's so late in the day. But an at the money contract is about, yeah, I guess it's so late in the day, 700, $800, $1,000 here. So I'll do that. I like to buy them at the money if I'm gonna buy them, but if I'm getting in for $1,000, I'm generally closing it for like 1,100. So they're really not worth my time unless I'm letting them ride. I had a couple for Wednesday, but I didn't keep them on long enough to really, see a yield. I scalped like 500, $600. It would have been worth like $30,000 at the end of the day, but not a big deal. We'll always get a next one, next trade, next opportunity. So once I see that our support's holding, 53.40 is one of my levels, and then 53.20. So if 53.40 breaks, I'm going to see how we react to 53.20, and then I can shift all of my trades around based on that as well, right? If we start to crater down, I'll start closing trades out, taking contracts off. I'll begin rolling some of them as well for a credit, maybe to get better strikes. Because I also am a firm believer this market rarely, right, unless it's expected, where you have a really large expected move, which we did today, which is why we were able to range from like 53.30 all the way to 53.6 or sorry 53.90. So it's a 60-point move. Taking a look at that and trying to break that down, hey, that's a full round trip, right? You go from all the way from support back to resistance. And it's all within the expected move. We've stayed within the expected move all day for this move to happen. So I'm trying to, mitigate my emotions in the process of watching this and placing a trade. Yeah, we had a little squeeze here, but overall, it hadn't been building for very long, so we shouldn't expect too crazy of a move. But I also am one to believe that like the market rarely, if ever, would just continue to shoot down in a VIX environment that we're in. And if you're like, Logan, what's the VIX? We kind of talked about this last episode on this series that I'm running, where this determines the options premium, right? And volatility. So if the VIX is 12, you're not going to be moving 100 points a day. If the VIX is 14, like it was last week, you're going to get some big moving days. You might get a 50, 60, 70 point down day, and 50 points is only 1% in this market. So you're going to see volatility shift, and the VIX works really well with my 390 and my 195s as well down here. So I just wanted to show you guys that today, but that's going to be everything for me in this video. I do appreciate all the support as always. I'm going to start live streaming as well. I really am excited to see what you guys think about this video, how it's helped you. We're going to do one more gift card giveaway too. We're going to do a $10 Amazon gift card. So if you guys have made it all the way to the end, just comment. Let's see, what should we do this time? Let's do a football emoji, even though it's not even football season. All right, yeah, football emoji. And then say, let's see, made it. Just say made it and then put a football down and I'll enter you in that one. But we're going to do gift card giveaways throughout the summer. You guys just have to be subscribed. You have to leave a like and comment. And yeah, that's pretty much going to be everything for me in this one. But I do appreciate all the support. Like I said, if you want to come trade with us, the link is below down in the description. And if you have any more questions, there is an email below. You guys can shoot me questions and maybe some ideas or something you've been working on. And, I read them all. If I don't reply even, I'll read them. So it's a good way to kind of reach out to me. And yeah, so that's going to be everything for me. I appreciate all the love and support. You guys are the best, and we'll chat soon.